Kenya's Court of Appeal has given a long-awaited nod to its National Social Security Fund Act 2013, which will enhance basic Social Security protections. Now, the NSSF contributions are now capped at 12% of an employee's monthly pensionable earnings, where the employer is required to contribute 6% and the remaining 6% is contributed by the employee. The employer, of course, makes direct payments to the NSSF. Employers must apply the new rates immediately and to pay the enhanced contributions by the 9th day of each month. The Act has also introduced 2 separate tiers of contributions. On the other side, Kenya's High Court on Tuesday this week declared unconstitutional a 1.5% levy intended to fund affordable housing that was imposed as part of a finance law adopted in June, but later stayed the ruling until January the 10th to allow for the government to appeal. The law, which is also doubled the fuel tax and increased the top income tax rate, sparked violent protests in July by opponents who said it would further squeeze households at a time of rising cost of living. Kenya has dropped plans to tap international capital markets this fiscal year. The country last issued Eurobonds in 2021. Kenya appointed Citigroup Incorporated and Standard Bank Group Limited earlier this month to assess a return to international capital markets funding, which could include a Eurobond or Islamic finance debt. The wider African region, the African continent, will face existing economic shocks or more shocks in the new year of 2024, according to the latest update from the African Development Bank. Now, the African Development Bank has revised its short to medium-term macroeconomic forecast for Africa for 2023 and 2024 downwards to 3.4% and 3.8% from 4% and 4.3%. The updated data published today, Thursday, in the 2023 Africa Macroeconomic Performance and Outlook Update, which is a follow-up to the Bank Group's 2023 Africa Economic Outlook released in May. Joining us now to discuss further, Churchill Ogutu, who is an economist with IC Asset Managers. And Churchill, it's good to finally see you in person. We've been talking virtually in the past, so you're welcome to Nigeria. Good to have you. I guess kicking off with the downward revision of the GDP growth for the African continent, well, what do you make of what the AFDB has put out?
Some of the factors that they flagged is the stickiness in inflation. If you look at some of the largest economies in Africa, Nigeria and Egypt and Ethiopia, you find that their inflation rate is all above 20%. So that pretty much has been a concern to the bank in terms of even revising lower the 2023 and 2024 outlook. And also the commodity prices. Some of the countries are import-reliant countries. So the impact of higher commodity prices definitely has a negative impact to those countries which are heavy commodity users, but now they have to import those particular commodities. So those are some of the factors that the bank flagged in terms of as it revised lower its outlook for this year and also into next year.
So those headwinds, do you see any other headwinds besides sticky inflation? Any other headwinds you see affecting the continent for the new year?
Definitely fiscal concerns, debt vulnerabilities. Right now, a number of countries are trying to come up with ways that they can be able to restructure their debt, Ethiopia, Zambia, and Ghana. And right now, we are at a point whereby also, in addition to that, most of the countries have been quite locked out of the international market. So those are the factors that pretty much have filters into their growth prospects and now has led to the downward revision to the growth in the continent.
Is your outlook over at the IC Asset Managers in line with that?
You see the continent is a big continent, so there's a mixed bag. We are seeing positives and negatives as we get into the next year. Obviously, from a fiscal concern perspective, we are starting to see some progress somewhat in some of the countries such as Ghana, whereby there's still some expectations that there could be some restructuring on the external debt. So that's a big, it will be a positive catalyst for that particular market and also will feed into their growth prospects. If you look at some of the other countries such as South Africa, expectations into this year was that there could be some progress with their energy to at least to address the energy concerns. We are still monitoring the situation, so we expect that the outlook might be quite patchy into the year 2024.
All right, and as far as, I think coming to Kenya now, the decision not to issue the Eurobond, what was behind that?
It's primarily hinging on the fact that now we've had some newer concessional financing coming in. Initially, our financial year started in July and ending in June 2024. So we are at a point whereby we have seen increased financing from IMF. There was a sixth review that ended sometime early this month. And what came out from that review was that there's some augmentation of the funds. So we're expecting some additional $900 million between January 2024 all the way to March 2025. But for the next disbursement, which expect in the month of January 2024, we expect some additional $300 million. So that's one. The other thing is that we have a World Bank Development Policy Financing Program. Initially, the quantum that Kenya normally receives is normally about $1.1 billion. Now we expect an additional $500 million. So combined, we are saying that there's some increased funding from the concessional sources, IMF and the World Bank, which now has led the authorities in Kenya now to rather not go into the international market route at this point in time. Yields are quite high. The 2024 Eurobond for Kenya is around 12%. Definitely it's come down. At some point it was 20%. Now it's around 12%. But the fact that it's a double digit, I think, is a no-go zone for the authorities. So they're looking at some supplementing from other alternative sources.
Okay, we were looking at inflation in our first segment in Germany, inflation in France. Those, in fact, United States, the developed world, inflation seems to be receding. If by some projections we see rate cuts in the new year on the developed side, does that make the environment for Eurobonds more conducive or cheaper, more affordable for emerging markets like Kenya?
Yeah, that could be, if you look at it, that the fact that, and that's the expectations even in our own in-house view, that at some point from first quarter next year, we could start seeing rate cuts starting to percolate in the developed markets. But then that's one thing. The other thing that also feeds into the yields of the Eurobonds across for frontier markets and also the emerging markets at the risk premium. So that now speaks to the idiosyncratic risk that we are seeing in the different countries that are issuing the Eurobonds. So that's also a main concern. Right now, if you look at the spread between where the US Treasury is vis-a-vis where any typical African Eurobond issuer is, I mean, the spread is quite wide. So yes, as we start seeing rate cuts starting to feed in, the next question is how are the individual countries trying to address the risk, the debt fiscal vulnerabilities? So that will now speak to whether countries will now be able to go back to the international market. This year is the first year that we've not seen dollar-denominated Eurobond issuance across by any African market. The last one was in April 2022 when South Africa and Angola issued a dollar-denominated Eurobond. What you've seen actually this year, we've seen Egypt coming to the market, issuing Japanese yen Eurobonds, that's samurai bond, and also Chinese yuan Eurobond, so that's the panda bond. So probably we'll see some innovative ways that African issuers will come to the market into next year, just trying to probably avoid this dollar Eurobond market, which seemingly has been closed out to them.
Churchill, that's an excellent breakdown. Thank you so much for that. Very illustrative. Domestic matters still in Kenya, the 1.5% levy that was supposed to support the national affordable housing. What's your take on that being scrapped? Was it the protests that pushed the court to do that? Was it all about the Constitution? What's your take on that?
Yeah, so that was part of the Finance Act 2023. Initially, there was a proposal that the housing fund levy was to be at 3% of the sort of, not the gross salary, but on the basic salary. But in Kenya, we have a pretty much democratic process during the budget process, so there's some public feedback that was incorporated. But now what came out in the final law was 1.5% on the gross salary, not on the basic salary. So those are some of the material differences that this particular petition petitioner went to the High Court and said, hey guys, by the time the finance bill was being tabled, vis-a-vis what is now in the Finance Act, they are totally two different things. There was no public input into this particular, what was the final iteration of the housing fund levy. So that's one. And also the other thing is that initially we talked about, in the segment, we talk about the National Social Security Fund in Kenya.
Yes.
So there is a proper fund. It's regular. There's a board overseeing what gets into that particular fund, and there's a proper oversight. But when you look at the housing fund levy, it's a fund, but you don't have proper structures around that. So if you look at the hearing, the ruling that came out 2-3 days ago spoke to the fact that yes, people are being deducted the 1.5% of their gross salary, but where's the structure that ensures that there's proper governance around how the fund will be utilized? So that is what the court spoke on in its judgment. So it's still, it was something that even people knew that this might pass the test of, from a legal definition of it, that there wasn't any proper structure. If I may take you back, this is not the first time that we've had a housing fund levy being introduced within the discourse of a Finance Act in Kenya. Those 2019, 2018 housing fund levy was introduced, but the same thing, the court struck it out because one, there wasn't any proper public participation, there wasn't any governance structure in place. So this time round, yes, there was some bits of public participation, but also during the public participation, guys were like, hey, by the way, we need to put proper structures, but not the government pretty much ignored that. So it's now the ball is on the authorities. Probably what you could say, they might try to correct the wrongs that were done. Right now the debate is, okay, people have paid because this fund levy came into effect from July. This is the start of the fiscal year. Now, 5 months later, how do we handle the issues about refund, which is a hot potato issue in Kenya? So that's pretty much where we are at the moment.
What's your, about minutes ago, so putting this all together, what does this mean for Kenya's finances, and what's the outlook for the new year for 24 for the largest economy in Eastern Africa? Well, how do you see things?
Obviously, the biggest sticky point in Kenya is now the fiscal issue. It's not in the best shape. There's been a number of revenue-raising measures being put in place. In fact, today, we've seen the Finance Committee coming out weighing on its recommendation of the tax policy. So basically, this national tax policy should give a policy guideline over the next 5 years how the taxes should be in the country. And on the side, we also have the medium-term revenue strategy. This is on the back of the IMF program that Kenya is in. So there's some emphasis of generating additional revenue. So that's on one side. But if you look at the other side, expenditure, there's been some fiscal indiscipline in how the expenditure side is being utilized. So that's another thing. So all that definitely ties into the financing. How do we finance how do we finance the budget deficit going forward amidst the backdrop of this staggering $2 billion Eurobond that is coming due? Though my feeling is that by and large, that one will be, there's a way that they will be able to handle that Eurobond, $2 billion, based on all these funds that are coming in. So we may not get into the Eurobond market, but at least we have some other supplementary finances that will enable the authorities to be able to retire that $2 billion bond. But now from second half of next year, I think by and large now the authorities will now be able to tinker a bit some of the tax proposals, because right now I think the economy is not that vibrant to be able to accommodate all these tax proposals that have been lumped on Kenyans.
Is Kenya still a viable investment environment? If I wanted to get into fixed income, money market, Kenya equities very quickly, is it still attractive for 2024? If we want, because our viewers, they're investors. They want to put their money around the world in places they can get a return. So is Kenya still attractive?
I'll give you two answers. First, as a Kenyan who's coming to Nigeria, definitely market Kenya. But secondly, there are a number of risks that anyone needs to be wary of. One of them is now the FX, foreign exchange concerns. Yes, you can come into Kenya, you might get into the bonds or even the equity space, but now the challenge is now at the point of trying to repatriate the funds. Probably the FX might move against you because there's been some challenges around FX in Kenya. So if an investor is able to find a way around how they can be able to repatriate their funds, I mean, Kenya, it's still an investment opportunities. There's values more so in the equities space. We've seen some of the stocks now at their multi-year lows. So that's an
buying
offering.
Opportunity.
Exactly, yeah.
Churchill Ogutu, economist with IC Asset Managers. Thank you for the fantastic breakdown on the equity side, fixed income side, macroeconomic side, even the legal side in Kenya, the largest economy in Eastern Africa. It's a pleasure having you on the show, Churchill. Thank you so much.
Thank you.